In Q3, all the segments, whether it is our IT services or engineering services, products and platform, all verticals, all geographies, everybody fired in on all cylinders. And that's why we have a spectacular results. This is the highest constant currency sequential revenue growth that we've had in 46 quarters. So it's a record performance. And our bookings again was very high. It was 64% higher at 2.1 billion. We had 8 large deals in the services side and 8 significant deals on the product side. Our hiring was again a very big quarter. We hired more than 10,000 people as a net hiring. So from all perspectives, it's good. Our margins came in at 19%, which is flat compared to what it was in the previous quarter. The finer details on the margins is our IT services margins declined and products and platform margins significantly went up. And IT services margin decline is largely due to some investments that we are continuing to make in freshers. We've hired 22,000 freshers. Some of them are under training. Some of the transitions, higher resource talent cost, all of that is what is driving some cost increases. But overall, the outlook is very good demand environment and good outlook going forward. Growth momentum is back. Like last quarter, services business grew 5.2%. This quarter, services business grew 5.3%. I think which is close to the highest in the industry in terms of organic growth. And now year-on-year growth will take some time to catch up, but quarter-on-quarter, last 2 quarters have been very good. And product business has a different dynamics, and we should always look at the services and products separately to do the right comparisons. Year-on-year is a 4-quarter comparison, right? Even our year-on-year growth is 15% was the constant currency growth year-on-year. And when you look at services growth, it was 16%. So it's a pretty good, very good growth from a year-on-year perspective. And the important aspect is all of our growth is organic growth, right? That's another element to be noted. Yeah, attrition has gone up compared to the last quarter, even though if you look at the industry peers, our attrition is still lower than most others. But in terms of our hiring plans, we've hired about, we have a plan to hire 22,000 freshers. We already crossed 15,000 so far in the year. And our plan for FY23 is to double the fresher hiring based on all the demand and all the pipeline that we are seeing. So that's the plan. And the lateral hiring will be a little bit balanced with the fresher hiring. And that will get specific numbers we don't have for the lateral hiring. We normally plan freshers, and the lateral hiring is something which we do based on the demand and project and location and things like that. This is a long-term strategic investment that we've made, and there are very strong product portfolio. A lot of them are getting modernized and they're being cloud enabled. And that the reason we've grown this quarter is a lot of new customers have increased their consumption of some of our products. So these are all good leading indicators of the strength that is building up in this business. However, one has to look at this from a long-term perspective. There are some products which have declining characteristics. So as the proportion of growth products increases, then the overall growth will improve. I think more the product business, we've said 0 to 1%, so you can very easily estimate what one can expect in the product business. And in the services business, given the bookings have been good, the pipeline is good, and the hiring has been very strong, so we should continue to see good growth in the services business in Q4. I think we see both the spectrums. One, the large deals which are integrated digital foundation and application modernization integrated operations deals, which are large deals. And then there are lots of small deals which are in cloud transformation and cloud migration, application modernization, data modernization. They're really not small deals. It is just that the customers are giving out work in smaller pieces. But if you really add up everything, it does look like big opportunities. And that's what you see in our client addition has been very impressive. Our $50 million clients has gone up by 11 over the last 12 months. Similarly, all client categories have gone up. So there is significant uptick in existing clients in terms of more and more modernization work, both application, data, cloud transformation, and the engineering services. See, large deal or small deal, it's all added up in the 2.1 billion that we provided, right? That's a 67% or 64% increase over the previous year, same quarter. So one should look at the total TCV signed, and I think that's giving us definitely a lot of confidence. I've not done an analysis pre-pandemic versus this, what the smaller deal sizes averages are. But I think the right indicators will be to look at the overall pipeline, is it growing or not, and the overall booking. Because even big deals sometimes are getting broken up into small deals, and many small deals in the same client. This is not related to booking. This is based on last 12-month revenue generated from the clients. So I think these two are not comparable metrics. And this is something which changes every quarter. It won't change, but the right metric will be to see on a year-on-year perspective. That's where almost all the client groups have significantly increased. In fact, $1 million clients have increased by 50, $50 million clients have increased by 11, 20 million by a handsome number. So across all categories, it has increased. Especially for all the newer modernization, data modernization, digital engineering, cloud transformation. I think we have increased the rates, and customers are also are considering paying higher rates for some of the skills. Everybody knows the current talent and supply situation. So I think they're looking at how they can support us. I mean, prior to Omicron, we had a return to office policy, and gradually the people coming into offices were increasing. But we have moderated that, and we put a stop. So now 3% of our employees are working from our offices, and we're going to wait and watch, wait for another 4 weeks, and then take a call. We've not reached 5,000. We are still about 1,000 plus. I think last time we announced was 1,000 people in Sri Lanka. So these numbers are going up, but given that we are close to 200,000 people, I think unless it reaches a certain scale, it will not make an impact in the overall numbers. So it's early days in many of these geographies, right? I mean, if you're able to go to different geographies, and I think it just makes your the pool is much wider. So from that perspective, I think it is helping us in our net hiring. But for it to make a significant impact to the overall numbers, I think it'll take some more time, maybe another couple of years. 19 to 21 was our guided range, and we came in at 19. And this is something we believe we will be able to control it in the next 2-3 quarters, because as we are ramping up, there is fresh talent, there is salary increases. This quarter, we had wage hikes for almost half of the employee base. This was the second hike in the same calendar year. So all of that has contributed to some pressure on margins, but we are pretty confident that this is something we will recover by more freshers, by rate increases, and multiple other interventions. We think we will get back.